Hello and welcome to ICM's weekly educational webinar. This week we chose to talk about Gann. Gann is one of the most known traders and famous traders. He started trading back in 1900s, early 1900s, and he also added a lot of value to the technical analysis, and he made several assumptions that a lot of traders use nowadays. So we're gonna first start with having a small introduction about Gann and how he started and what are the basics of his theory. And then we're going to talk about Ganns and Ganns Grid, which are available on the MetaTrader 4 platform. So first, his full name is William Delbert Gann. As we said, he's one of the most famous traders in history. We're going to talk how he became famous and after what. So he was born in 1878 in Texas and started trading at the age of 24 near 1902, almost 1902. He moved to Wall Street, and also he made his own brokerage firm. Almost in 1930s, he created, or he discovered something called the market time factor, or a theory called market time factor, that he believed that it could help him predict the market. And he opened 2 trading accounts in order to verify whether his foundings is positive or valuable or not. So he opened 2 trading accounts, one with $300 and the other with $150. He was able to turn the $300 into $25,000 in 3 months, and the $150 account into $12,000 in only 30 days by using the market time factor. After this, this performance was verified in Wall Street. He became so famous, and everyone was after his studies, and they were impressed with his performance. We're talking about hundreds or thousands of percents in return. So this is definitely something unrealistic relative to a lot of traders and a lot to the consensus of the market. So that's why he was out of the box, and this led to him being famous. So one of the key basics, or one of the key beliefs of Gann, is that you can study the past, and by studying the past, you can predict the future. So he relied heavily on studying the past. He used astrology, astronomy, and geometry. He tried to always always merge or converge his astrology and astronomy studies with what's happening in the market. So always he tried to link events happening in the universe to market moves in several commodities. This is why this was one of the key foundings that he was working on. So to restate, he used astrology, geometry, and astronomy to predict the future market moves. Moving forward, he based his studies, like Gann, he focused on 3 main elements in order to consider a certain price movement. So he believed that you have to know some indications about the price, about the time, and about the range or the pattern that the market is moving in. So he made sure to deduce all the information relative to these 3, and if he can find the needed information relative to price, time, and the pattern, he would be able to consider the next price move or to predict the next price move, since he believed that the market is cyclical in nature. Cyclical in nature, it means that the price and time that the market moves, the price and time has a certain synchronization, and these cycles would repeat themselves. So that's why he relied on the mentioned 3 elements or areas. And also he believed that the price makes certain geometric designs. So from here he focused on the angles. We're going to talk about his angles in a while. So so these are the 3 main elements that Gann focused on. To go further in details about these elements, so using price study, he made sure to know or to use the key levels. Key levels, mainly there were either highs and lows or supports and resistances, where these levels are significant to traders and they have certain effects on their trading. So they were important levels. So he focused on these key levels in addition to pivot points and definitely his angles. And then the time study, he was able to, as I mentioned, he tried to find some historically reoccurring dates, and focusing on the natural means and social means in order to predict that the things that happened in the past are gonna happen again in the future. But he was uh, he was trying his best to know as much as he can data, or grab as much as he can data in the past in order to predict the future. We're going to talk about this in the next slide. Pattern study, also by using trend lines or certain reversal patterns, he wanted to focus on these patterns in order to detect whether the market is going to continue with the same trend, or we're having certain reversals which should force him to take certain measures. So this is these are the basics of the theory. Moving to Gann time cycles, since he believed that the market, that everything happens in the market has certain historical references, and he always quoted a certain book that in order to give us certain information that nothing new happens in the market. It is always the market's always repeating the previous events that happened. So as if you have by using this code, we can clarify it more. To make a success, you must continue to study past records, because the market in the future will be a repetition of the past. So this was a key belief. So you have to study the past records thoroughly in order to predict what's going to happen in the future, since everything that's going to happen in the future, it is a repetition of the past. Definitely the values or the proportions are gonna differ between the past. So for example, if we're looking at gold prices currently, which are making record highs, and you might say that this didn't happen in the past, but if you look for cycles, these cycles, they have a certain time limit, and this time limit, it has certain a change in prices in terms of percentages, and certain in terms of extensions and targets. So it doesn't mean that we have to continue trading in the same loop. If I have the data, I can tell by the study of cycles when a certain event will occur in the future. So if he has the data, he can study the cycles made in the past, in the past time, which could be founded by analyzing the data. He would be able to predict when certain events are going to happen. The limit of future predictions based on exact mathematical law is only restricted by the lack of knowledge of correct data on past history to work from. So if your data isn't correct, this is the only factor that could lead to different assumptions on the market. But if you are using certain mathematical laws that he believed in, and you have the proper data, you'll definitely is going to forecast what's going to happen in the future. So he was a true believer of his foundings. Among the key, since he was always studying the past data. So he started to link the events happening with the highlighted within a certain highlighted series of time. So he had to step up his foundings and decide on certain cycles. Among these cycles, there are 90-year cycles, there's 60-year cycles, 30-year cycles, 20 years, 15, 10, 7, and 5. These are the major cycles that he took into considerations, and he believed that at the end of these cycles there is gonna something is gonna happen in the market. So let's think about the one for the 90 years. So one of the supporting facts for the 90-year cycles, that there's something happened in the market back in 1839, then we had in 2020 in 1929, and there were expectations that something's going to happen in the market by 2019. So but this definitely missed, and we had a certain impact or a certain event in 2020. But these cycles, especially the time cycles that has long duration, they have a lot of doubters, since you can't prove that they are working. So you can just find any certain reasoning, but this definitely doesn't prove that these cycles are working. So usually you have to mainly focus on these the minor cycles that he believed in, since they are of a shorter time period. All the minor cycles are 6 years, 3 years, and 1 year cycle. So as we said, in order to make some benefit from these cycles, from the cycle studies, a trader should look for convergences of cycles. For example, if the end of the 15-year cycles is converging with the end of the 30-year cycle, maybe at this end there's something's going to happen in the market. So if you have certain cycles ending at the same time, this could raise the chances of something happening in the market. So these are the foundings of Gann time cycles. Moving to Gann fan. Gann fan is just a series of lines. These angled lines are based on certain calculations that he believed in. So So Gann tried to create these fans in order to detect certain supports and resistances or certain key levels in the market, and based on these key levels, he would definitely trade. So I'm gonna explain in a while how these angles were founded. These lines, as we said, are drawn to show support and resistances, and the fan is drawn from a certain high or a low price. So you have to look for a certain key level in the market, and based on this key level, you have to draw the fan. Mainly, he has different patterns for the fan or different ratios, but one of the key ratios that he used is 1 times 1 or 1 to 1, which means that for every one move in price unit, there should be one per one move in time unit. This was one of the assumptions, and this would definitely give you an angle of 45. I'm going to talk about angles in a while. So if the market is moving above this 1 to 1 line, it is we're moving in an uptrend, and if the market is moving below the 1 1, we're moving in a downtrend. Definitely it depends on how you are drawing it, you're drawing the fan, but this was one of the key basics of deciding whether the market is moving in a trend or a reversal is coming. So moving to explain the Gann fans or angles, we all remember in mathematics we have the chart, we have the x-axis and the y-axis, and we have certain coordinates. So here the coordinates in trading, if you're taking a trading chart, the coordinates on the trading charts, you have on the x-axis you have the time, and on the y-axis you have the price. So what he believed in prior is that for every one move in x, there should be one move in y. So by this, if you're drawing the box 1 1, I'm gonna draw it now on the chart, on the coming chart. This is just to show you some assumptions. So if you're just going for 1 x and 1y, so you just, if, I don't know if I draw it, you remember we had this bracket back then. We had the x and the y coordinates. So for example, if we're choosing x1 and y1, so you have to draw the box, and this box you can draw a line from 0 point to this box, so in order to have the angle of the chart. So this I'm gonna explain this in the coming slide. So from here, he derived all these angles. So he stated that for every one move in time, one price unit, one change in price unit and one change in time unit, you're gonna have this box 1 to 1 box. So you're gonna have an angle of 45 if the time is stable at 1, and there is another move of if there is a move of one unit. One price unit, one time unit, and two price units, there will be an angle of 62.75. If we have also x-axis time, one time unit to change and three price units change, we have an angle of 71.25, 75, 82. But you have to notice something, that it is almost it is symmetrical. So the difference between 45 and 26.5 is similar to the difference from 45 to 63.75. From 45 to 71.25 is also exact. From 45 to 18.75, from 45 to 15 is also exact. From 45 to 75, and from 82 to 45 is similar to 7.5 to 45. So this is the middle line, the 1 to 1, and these are symmetrical lines drawn at the side. So I'm going to move to the next slide to show you on the chart how these happens. So this is a normal chart. We have here time, and here we have price. So this is 1 unit in price, and this is 1 unit in time. So for the 45 angle, if we just draw a line from 0 to the top of the box, we have an angle of 45. So we have a line angle of 45. So this is the middle line. If we have, if we were talking about two time units and one price unit, we have a smaller angle. Also, if we have one price unit and 4 time units, we have also another line with smaller angle. And if we have one price unit change and 8 time unit change, we have also a smaller line. Definitely it's similar to the upside. If we have one time unit changing and we have two price, we have another move higher here with a bigger angle. If we have one time change and 4 price change, we have a steeper line. And definitely if we have this the 1 to 8, we also have a steeper line. So this is the fan, this is the theory behind the fan, this is the 1 to 1 line, and here we have these other these other patterns, the 2-to-1 and the 1-to-1. So we're meaning that for every two moves, we're having only one move, and for every two moves in price on time, we're having one move in price. So this is definitely have to lead for a lower angle. So this is in theory the Gann fan. We're gonna move now to the MetaTrader 4 platform in order to show you how you can plot it on the MetaTrader 4 platform. Okay, so let's take any chart. For example, I'm gonna take the euro dollar weekly chart. So what you have to do is if you're gonna draw the one-to-one line, so you have to pick a certain bottom or top. So if we can either draw it here, there's this top, or we can draw it here at this bottom. So by choosing these, we can do something very easy in order to choose to choose the angle. We can go here for lines, trend line. First, let's just highlight these two levels. We're gonna draw these horizontal lines here. So what you have to do is just go for lines. There's the trend line by angle, and just open to the downside. So 360 is a circle degrees. So if you just deduct 45, you're gonna have this line. So you just come here again. So you drew this line, the one-to-one line. You can come here and then go for insert Gann. You go for the fan, and you just do this. Okay, and after that you double click on it in order to choose the line. So here's the line that we're choosing. The one-to-one line is almost at the 45 degrees line. So we can notice here that when the market moved above the fan here, above the one-to-one fan, we witnessed a reversal in trend. We witnessed here also certain resistance. So the market first we had these two lines here, or these 2 points in order to draw the lines. And also here we will notice some resistance, 1, 2, 3, 4, 5, 6 weeks of resistance, and then we had this breakout and the market rallied higher. And here when we approached yesterday, when we approached the level, we started feeling some selling pressure in the market, and the market retraced a little bit lower. So this is how you can use it. Definitely when the market is above this line, the 1-to-2 line, the market is strong, and when the market is below the 2-to-1 line, it is very bearish, and it is weak or soft. So this is how you can use it. Also, there's another way to use the fan is just to also not just rely to expect where the price is going. If you can remember what we said at the beginning of the webinar, that Gann also he focused on time. So when this is gonna happen, so he tried to predict also not just the change in price, but also when this change is gonna happen. So you can go for example, let's take certain levels. So let's choose this previous level. So if we just merge the levels that we choose on the chart with the Gann fan, you can say that Gann is expecting the price, for example, to reach 2019 on August 2021, for example. This is one of the assumptions. This is definitely not concrete, but this is how Gann was looking at these assumptions. So definitely it's similar to any other analysis in the market or any other schools. There is nothing just solid and this is the correct way, but these are just assumptions that you can use in your trading. So this is how you can draw the fan. I'm gonna do another example for drawing the fan, but this time on the bottom. So let's just highlight this bottom here. We're just gonna go closer. We do it again. We go for the trend line angle. We draw a 45-degree line, and then we go for Gann fan. We just draw it here. Okay, so we have it here to the downside. Just have to double click on it and then move the third point here to make it just a line above the trend line. So as you can notice, as I just mentioned, that as long as we're crossing above the 2-to-1 ratio to 3-to-1 ratio or to 4-to-1 ratio, the market is getting stronger. You can notice here the resistance lines. So every time the market was approaching the line, we were having a certain rejection or a certain drawback in price. So this is one. Also, you can use it in a different way. You can just, if you don't want to draw the 45 line, you can just come here, go for Gann fan, and just you can draw it. So you just select the middle line, and you can just go for it that way. So you're just putting, for example, a certain line that's showing the slope of the market, and also you can notice that as the market is approaching the 1 to 2 change, it is having a certain rejection or reversal. So this is how you can use the fan for detecting support and resistance levels. Some of the traders do also have something else, so they just merge these fans 1 and 2. They draw both together in order to. I'm gonna have a certain demonstration. So let's say, so we drew this fan here, this one, and we have another fan. So they started looking for certain parameters where the market can move. And so, for example, this parameter, so they can have a certain prediction for how the price is moving on the upside, and also how much time it will take to reach certain levels. So this is how also you can use the fans. So we're using 2 fans. There's, for example, this box here. So here we have this. So for example, that the price can move inside this ratio. For example, let's say the market moved here, so this can happen, for example, in this block. So this is also one of the ways that you can use fans in order to predict how the market's going to move. So now let's move, after explaining the theory behind the fans. Let's move to the grid. The grid is similar. I'm just going to use different chart. I'm going to go for the gold chart. So if you're just going to draw the grid, let's first start by showing you how you go for insert, you go for lines, and you go for grid. So by just first you have to detect, for example, certain distance for this, and you just double click on it. You can have 3 points. You just merge the first point to the top, and then you go for the third point to where you are considering this market to move. For example, let's set it here along this this trend line. So by drawing it back, you can have the grid in front of you. So this grid would help you also to find some certain supports and resistance levels. You can notice here we had this support here, and the market rallied along with the grid, and also this happened here again, and then the market moved towards this level, and then here again we had certain resistance. So the price is acting with these grids. Also, this grid could help you in detecting, for example, in drawing certain support and resistance levels. So for every cross happening, you can go for a certain line. So this cross happened here, and then another cross here, and then another cross here, and this cross here. So we go for the downside also. There's this cross, and then another cross, and then another cross, and another cross here. So now you can come here and just delete this grid. So you have a certain support and resistance levels, support 1, resistance 1, support 2, resistance 2. So you have a series of support and resistance levels, and you can notice how the market was reacting to these support or resistance levels. You can notice here how the market reacted, and here, and then here, and then here, and then also these 2 levels. So the market is definitely showing you some respect to Ganns grid. Now let's draw the grid again. There's also another thing that you can do with the grid. Remember when some of the traders do add period parameters, they go for highlighting the period parameter for the days in order to see how the market is moving within a certain day. So here we had this move, another move, another move, and another move. So if you can just add the period parameters. So also you can use the Ganns grid in order to draw such period parameters. So you go again here and then go for a Gann grid. So just to draw this again. So by choosing this, you also add these vertical lines here. On these crosses. And then you delete the Gann. And then here also you have certain blocks, how the market is performing during these blocks. So this is also could be supportive. You can delete the bottom line, the horizontal trend line, which also would help you in finding these moves. So this is for the grid. Also another way in using the grid. This grid could be supporting and drawing trend lines and channels. So this could help you in identifying some points, some projections or some retracements. So for example, you have this trend line, how the market is moving here. You can draw another trend line from here for the downside, for example. You can also go for drawing a certain channel. So by drawing the channel here, we can notice if we drop it here, you can notice how the gold reacted first here and then moved higher, and then also we had resistance, and then support, and currently resistance. So the price is respecting this channel. You can also go for extended channels if you are looking for further drops. Also, you can merge these channels or lines with certain pivotal points that are available on the chart. So this is also another move or another use for Ganns Grid. Mainly this is all about today's webinar. If you have any questions, please write them down. And else, I would just like to remind you that all the opinions, analysis, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell a certain financial instrument, and ICM doesn't provide any investment advice. Okay, perfect. This is all for today. Thank you all for joining, and hopefully we can get in touch in the next educational webinar next Wednesday. Thank you all for joining today.